Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is October 6, 2022. One more day until the non-farm payrolls. We're going to have to deal with that, but the Forex markets are showing a little bit of a dollar strength. We're seeing stocks trading lower in pre-market trading. Bond yields are near unchanged. So let's get into the markets, what the charts are saying, and some of our major currency pairs. We'll start by taking a look at the euro versus US dollar. And as you can see here, the price is just dipping below the 100-hour moving average. That moving average currently comes in at 0.98. Looks like 6.967 level here. Currently at the moment, the current price is trading just below that at 0.9864. And you note yesterday the price did dip below that level about an hour or so from this time, at the same time yesterday, before rebasing against the 100-hour moving average and moving to the upside. So we're seeing a similar pattern, but we do have two bars where the price is below the 100-hour moving average. So maybe there's a little bit more bearishness from a technical perspective. The moving average is also higher than yesterday's level as well, so it's an easier hurdle to get to and through. This swing area is also of importance here. That moves up to around the 0.9877 level on the top side. If we're able to stay below that level now, that would keep the bears a little bit more in control in the shorter term, at least, as the market kind of consolidates ahead of the non-farm payroll numbers tomorrow. We did see German factory orders come in much weaker than expected at minus 2.4% here today, and retail sales in Eurozone fell minus 0.3%, which was as expected, but still negative. So there is some negative in the markets here. Also of concern is obviously the OPEC decision yesterday, where they cut production by 2 million barrels. If you look at the actual production and the quotas, however, it was probably around $1 million barrel cut. That's not necessarily good, of course, for the European economies as they look toward their winter. So some bearishness coming in the euro versus US dollar here today. We'll see if that momentum can take the price down to our next target, which is at the 98.21 level. That's a 38.2% retracement of this move to the upside. That would be where we would go and need to go to increase the bearish bias on the downside. Below that, we'll look for the 95.10-ish type area, and the 200-hour moving average is way down here at the 97.67 level. That also corresponds with the 50% retracement of the move to the upside. So double level down there. Still a long ways away from the current levels, but we are a little bit more bearish here below the 100-hour moving average. In the sterling versus US dollar, we have a similar pattern here with the price moving below the 100-hour moving average, but earlier than it did in the euro versus US dollar. We saw the price move below that level in the mid-morning session, or early morning session, I guess, in Europe, at the 112.98 level. That's near the 113 level. That is now a risk level for sellers below that level who are looking for more downside in the pound versus US dollar. We continue to see yields, though, move higher in UK. They were up around 15 basis points earlier when I did about a half hour ago when I looked. That's not helping the pound versus US dollar. What we're more seeing, I guess, is some selling out of the UK assets, which is helping to push the pound down, selling bonds, selling stocks, so on and so forth, which is leading to some selling in the pound versus US dollar. Admittedly, the price did have a huge move to the upside here. We had huge moves to the downside as well, but from the low that we saw last Monday, as a matter of fact, the price moved from 103 all the way up to 115 at the top side. So that's in my quick math, that's around a 12 or so percent gain to the upside in a relatively short period of time. Admittedly, it's just retracing all the declines that we saw through here as well. So sort of a V recovery, but the price did move up to retest sort of this area here where the price was consolidated up and down and moved into that area, now back below that area, below the 113.50 level. So getting above the 100-hour moving average would take some of the bearish bias out of today's market, but until then, the sellers are more in control. We'll look at this area right here between 112.11, 112.35. Get below that level, and traders will be starting to look down toward the 200-hour moving average and the 38.2% retracement. Way down here at the 110.589 level. Of course, there's going to be other levels in play in between that break, but if we do get below the 112.11 level, the bias would shift more to the downside with the risk at 112.36 at that point. The dollar versus yen, nothing much new to report here, except for the 145 level on the top side. We're trading above and below the 100 and 200-hour moving averages, which are converged. That will be our barometer in the short term. Get above 145 would be more bullish, although we know the story about that with the Bank of Japan intervention, although they're asleep, and the move to the downside would open up the door for I guess this swing area between 144.05 and 144.18. The 38.2% retracement of this move to the upside did stall the fall in the move down yesterday into the Asian session low, and that level, the 38.2, will still be a support target on the downside for that currency pair. In the dollar versus Swiss franc, we are back trading right near the 100 and 200-hour moving averages, and also re-entering into this swing area, going back in time. We had swing high, swing high, swing high, swing high, so on and so forth, and then swing lows, and then swing highs and swing highs. And yesterday we did move above the top side of that level after breaking more back to the upside, and what was really volatile trading here. Trading here today, we came down through the trend line here down to the 38.2% retracement. It's moved to the upside and found buyers coming in. So technically speaking, buying at 38.2 and right now selling against the 100 and 200-hour moving averages on the upside is what the traders seem to be focused on at the moment. If we break above that, that would be above the 98.73 level. That would be more bullish. Stay below this level and get below this old trend line, which is about to be removed from my chart. Chart would have the traders targeting the 38.2% retracement. So there you have it. A look at some of the major currency pairs. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.